Jim, I will turn it over to you.
Thanks, Kelly. Good morning, everyone. I appreciate the effort. Some of you had quite a drive to get here, and we appreciate it. We certainly hope it's worthwhile. I know about some of your drives because I do visit the county, so I travel around as needed. And I was in Lewis a couple of weeks ago, and tomorrow I'm going to be in Davies. So Lewis and Davies both in the house. And then I'm also going to be in Livingston and Carroll later this week. And I believe Carroll is joining us on the webinar this morning. So I do travel as needed. If you feel like you need a visit and it's been a while, call me. My business cards are right there. We'll set up a visit and I'll come see you. We also do pre-retirement seminars. We're doing 5 of those regionally around the state. Got one coming up in a couple of weeks in Kirksville. And those are aimed for people who are getting a little closer to retirement and want to learn all about the ins and outs of the savings and pension sides. So I'm going to give you a little history here on the pension plan, if I can figure out how to work the projector. These stats are a couple of months old as of the end of 3/31. So you can see we've got 11,000 active participants in SURF. We're paying beneficiaries to a lot of people there, 4,700 retirees and almost 700 beneficiaries. The average monthly benefit has been climbing up. We've got it up over $500 now. So it took a long time to get that far. SURF's 25 years old, so we're not as mature a plan as loggers, for instance, but we're getting there, and that benefit is growing. Nobody's getting rich off their SURF pension, but we're trying to provide a dignified retirement to public servants. That's really all we're about. And you are public servants, every one of you. We appreciate you so much here at the office because you're the front line. We're trying to provide this benefit, and you're the boots on the ground helping us do this. You folks in HR and payroll and the clerks. We couldn't do it without you. So we sure appreciate everything that you do in helping us. As I said, public servants sometimes don't have glamorous jobs, don't make a lot of money, but my gosh, your community is a better place because you show up to work every day. So we appreciate that so much. Kelly, I'm having trouble working the projector. Is it to the left? Okay. When SURF was created back in 1994, people had the option of saying, I don't want to be in SURF, but that's not an option anymore. If you're hired after 1/1/2000, you are in a SURF eligible position, you have to be in SURF. There's no more opting out. It's possible some of you have some older folks on the payroll who did opt out all those years ago. Unfortunately, the IRS has deemed them forever ineligible. They cannot get into SURF. We've gone to bat with the IRS and they won't budge. So those folks are not in SURF and they cannot be in SURF. But anymore, if you're in a SURF eligible position, you are automatically enrolled in SURF once you hit that 1,000 hours a year. If you're full-time, it's immediate. If you're part-time, it's whenever you get to that 1,000 hours part. Contributions are paid based on your logger status and your hire date. So if you're a loggers person hired before 2/25/02, you got grandfathered in. You don't have to contribute anything to SURF, which is nice. Most of you have been hired after that. So if you're non-loggers back then, you were putting in 2%. But anymore, if you're hired after 2/25/02, loggers folks are putting in 4%, non-loggers folks are putting in 6%. It's possible some of the counties are helping and contributing something toward that, which is nice, the counties that can afford to do that. Most counties don't. Many have said they'd like to, but they can't find the money. So in most cases, the employee is paying this completely. All right, so we saw there's a difference in loggers versus non-loggers contribution rates, and that means that at retirement time, there's going to be a difference in how much benefit is paid out. The non-loggers folks, or the loggers folks receive 2/3 of what the non-loggers folks would receive. And that's because they're contributing 2/3 as much. we've done the math for you. So when you get a statement estimating what we think your benefit's going to be, we know your logger status. We've already taken that into account. You don't have to do math on top of that. The goal of the plan, of course, is to become vested, and every plan has different vesting rules, and this is confusing. Loggers is vested at 5 years, for instance, and SURF Savings has its own rules, but SURF Pension is vested at 8 years. And when I designed this slide, I tried to find a magic 8 ball, because I thought that might drive home the point, that 8's your magic number. So that might help you remember that. If people say, how long to get vested in SURF Pension? 8 years in a row at 1,000 hours a year. And at that point, you are vested. You will get a pension from SURF. If you don't have 8 years in a row when you leave, you get a refund of any contributions you've paid in. That 2% or 4%, or I mean the 2% or the 6%, completely refunded to you. Give us a couple of months to get the paperwork done, but employees do get that back. They get a full refund. We talked about counties, some help the participants and contribute a little bit. If your county is paying your SURF for you, then there's no money to refund back to you, but the county would get a refund in the term of credits. But if you're vested, you got your 8 years, full benefits are paid at age 62. Now again, Loggers has different rules, SURF Savings has different rules, but SURF Pension, we pay full benefits at 62. So we run a formula that looks at how long did you work and how much did you earn, and it spits out a number. And at 62, you get that full number, whatever it is. And if you're over 62, you get the full number. If you go earlier than 62, you get a fraction of that. So you can take it as early as 55 at a reduced amount. And in fact, at 55, it's cut in half. So it's a pretty serious haircut. But if you've got your 8 years in and you're at least 55, you can start drawing your SURF pension if you want to. But full benefits are paid at 62. You'll get this question a lot. You'll get people who have their 8 years. They are vested. And they say, you know what? I think I'm done working for the county. Just cash me out. Just give me my pension as a lump sum. I'm just going to take it with me. Maybe they're young. Maybe they want to move across country and start a new career. Well, the state statutes created SURF do not provide for a lump sum payout. And that's the state statutes. That's not us being whimsical. Okay, that's how the laws are written. So if they have their 8 years, they will get a pension, but it will only come as monthly payments for life. It cannot be paid in a lump sum. Now, Loggers has separate rules, and you might get people who say that. But the statutes that created SURF pension do not call for a lump sum payout if you're vested. If you're non-vested, sure, you get a full refund, lump sum of that money you've been putting in. But if you've got your 8 years, you're going to get a pension, but it will only come as monthly payouts. While you're employed for the county, there's a $10,000 death benefit in effect. And I'm sure everyone's aware of that. And we just sent out our annual statements a couple of weeks ago. One of the things we show on that is the beneficiaries that are listed on that $10,000 death benefit. So it's generated some calls from people who said, oh, my beneficiaries need to be updated. So that's a trigger. We hope they will notice that and call. Because we're going to pay whoever is the most recent beneficiary. So encourage your people to keep those beneficiaries current, especially if there have been any life-changing events. Because there have been cases where there's a divorce and a remarriage. Beneficiary never got changed. The employee dies, and the ex-spouse gets the money. It has happened. So please keep those beneficiaries current. The $10,000 death benefit goes away when you stop working for the county. That's while you're on the books, while you're on the payroll, $10,000 death benefit to your primary or contingents, however you have it listed. If you are still working and you're married and you're vested, so you haven't retired yet, but you do have your 8 years. If you were to die, there's the $10,000 death benefit, plus your spouse is entitled to a 50% spousal benefit. So half of what you would have gotten from your pension, your spouse will get that for life. If you're unmarried and vested, so you've got your 8 years in, but you're not married, your beneficiary receives a full refund of any contributions you've been paying into SERF. We talked about the annual statement that got mailed out a couple of weeks ago, and it also has a benefit estimate for what we think your pension is going to be when you retire at age 62. But maybe you're thinking a different age. Maybe you're not thinking 62. An easy way to do that is to go into the member portal and run a benefit calc for yourself. Now, if you're not comfortable doing that, call us. We'll do it for you. But we do have that option. Loggers has that also for your Loggers counties. But you can go online, you can run a benefit calc for yourself, you can look at the beneficiaries we have on file, you can look at your, those annual statements are all still on there. So that's a great way to find those. And once people retire and they start drawing a pension, they get what's called a 1099 form, and those are also available on the website for people who are comfortable going on there and doing that. As I mentioned, the rules we're going to be talking about today are state regs and IRS regs. So it's not just us thinking of whimsical rules off the top of our head, but we want you to understand these rules because they are pretty important, and that's what we're going to be talking about more today. Never be shy about calling us if you have questions, if you have concerns. Sometimes I help answer the phones here, and I'm surprised at the number of people who call and say, I hate to bother you, but. How are they bothering us? That's why we're here, to answer questions. So that kind of wraps up my part of the history of SERF, a little background. And I'm going to turn things over to our benefits department here. I mentioned some of the info that's available. And I'm going to end my part with a visual aid here. You can tie yourself in knots worrying about retirement, or you can plan ahead and really think about SERF and all its implications and what it means. And if you let those worries disappear, and you're really wise to start thinking early and call us whenever you have questions so that these issues don't pile up as if stacked one on top of another. For those of you on the webinar, I just did a rope trick and the crowd went wild. So they loved it. So to talk more about the benefits, I'm going to turn things over to our lead benefit specialist, Nancy Griffin.
I don't do magic tricks, and I always have to follow Jim. So I'm sorry. I don't do rope tricks. I can't juggle. But
My name is Nancy Griffin. I'm the lead benefit specialist. I don't follow my slides completely because we added a few things in. This is an enrollment packet. If you all do not request them from us, please feel free to. We'll be talking about a lot of the forms that are in here, specifically the enrollment form. I know a lot of counties give this to their employees to complete, and then this has to be submitted via CARS, but I know a lot of them give the blank ones to your employees. So this can be printed from our website. This is one of the forms that we do have out there that, even though it's submitted in CARS, we have a blank one. And one other thing on here, a lot of times the eligibility date and original date of hire are not the same. For instance, if a person starts part-time, their date of hire will be different than their SERF eligibility date. If you ever have a question, call your benefits specialist or accounting department. We will look it up for you. Or if you submit it and we disagree, we'll call and say, hey, was that person part-time to full-time? And then lastly, there are detailed instructions for all the processes that we talk about today in your clerk handbook. And I can attest to the fact that the people here last time listened, because I actually got a phone call last week. And I noticed a form on my dashboard. It was a term non-vested death. I do all the death benefits. And I said, oh, I see we have a deceased employee. And she said, yeah, I went into the clerk handbook and I followed the instructions and I went to your website and found the form. So I was very impressed because that doesn't usually happen. So, but always, if you have questions, please call before you get flustered. It's much easier to call us. So I will start with enrollments. They are submitted via CARS only. And for SERF purposes, we consider anyone who works 1,000 hours or more to be full-time. So if you hire somebody to work 20 hours a week, enroll them in SURF, even though you think they're part-time. We used to have a category that was part-time greater than 1,000 hours, but we removed that from the enrollment form because for our purposes, they're full-time. So if you budgeted for them to be 1,000 hours, go ahead and enroll them, because if you don't, once they reach 1,000 hours, they have to be enrolled anyway. Then they have to buy back all that service. It can count as a first vesting year. So it doesn't benefit them at all to not enroll them if you actually know they are going to work. And when you submit the enrollment form, we need a copy of the employee's driver's license or a copy of a Social Security card or state-issued ID along with a birth certificate, a Form I-9, or a U.S. passport. And please submit these within 15 days of hire. And we have a upload forms button. Also, if you forget to attach them to the enrollment form, they can be submitted electronically attached to the enrollment form, but we also have an upload supplemental file, or they can be faxed or mailed. Along with this is the Form 1A, which Jim talked about. It is very important to keep these up to date. We circled a few of the fields that are usually left blank that we have to actually, especially the Social Security number and the date of birth and the percentage of benefit. We see those left blank quite often, and we can't, cars won't allow us to enter anything unless we have it. They also need to be signed and dated. The signature is the most important. We will use a receipt date if we have to, but we need the signature and Social Security number. Next is the change of information. This is also submitted via cars only. You go to employment change, you select one of the 5 options from the drop-down menu, and then you go from there. You enter their participant Social Security number and click next, and then you just complete the appropriate form. For the participant information change, such as telephone number, cell number, address, email, name, or marital status, if you change the marital status, we need a copy of the marriage certificate if they were getting married, went from single to married, or a copy of the divorce decree if they went from married to single. If it's a divorce decree and it's 40 pages long, we only need the front page that has their names on it and the last page where the judge signs and shows. We don't need the pages in between. So that'll save you guys some time. Also, as Jim said, it's a good reminder here, if they do get divorced or married, give them a 1A and the Form 8, especially if they become vested and they're single. If they're close to being vested, it doesn't hurt to have that form on file. I know a lot of counties give them the Form 8 when they first start, and I think a long time ago, SURF probably sent out just the forms that we needed. That Form 8 isn't necessary until they're vested. However, if somebody does go from married to single and they've been there for a few years, I will go ahead and give them the Form 8. For employment leave changes, as a side note, if we receive pay, it is not necessary to submit a change form. The participant needs to fall off the payroll for 30 days. So if you're going to put someone on sick leave, ineligible leave, and they're going to be gone from June 1st to June 10th, you don't need to submit a leave form. As long as they come back in June and receive pay, excuse me, they'll get credit for that month anyway. So that will just save you guys a little bit of time. We do need a copy of a medical leave policy that can be uploaded and submitted via the upload supplemental file link in cars, email, fax, or mailed. If you all don't have a medical leave policy, I encourage you all to talk to your commission or whoever institutes your policies. If someone dies and they're an active employee and you don't have a medical leave policy, they do not get the $10,000 death benefit. We have a lot of counties that just have in the handbook, we follow the Family Medical Leave Act. Even if you're less than 50 employees, it doesn't matter as long as you have some type of policy in your personnel handbook. It is hard to not be able to pay that $10,000 benefit to an active employee because the county doesn't have a policy.
Even if we have the regular FMLA, that's fine.
Just put, as long as it's in your handbook, just put, we follow FMLA. Anything that says medical leave policy and a line underneath it, as long as it's in your personnel handbook. That's my mission, that's my new mission. I want to try to get all counties. I do all the death benefits now. It's amazing what $10,000 can do for a person. Just whenever the person goes on medical leave. We just want to make sure you have an updated policy, or we're going by your policy, because they can only be on medical leave for 12 months for service purposes. You all might do it for 15 months. We would only let the medical leave go for 12 months to hold their place in our system, but you can have it for as long as you want. And when you submit those, the form will be left open until they return to work. So don't enter an end date until that time. And if you think they're going to be gone 3 months, you might want to put 4 months, because the form won't be good after 3 months. And you can always put a term date in before, but you can't put a term date in after the drop-down menu month selected. I typically tell my counties use 12 months. If they come back in a month, it doesn't matter. If they come back in 2 months and you put a month, it does matter. You have to redo the form. So the drop-down has 1 month, 2 months, or what, I don't know. I think it's 3, 4, 6, and 12. I would always use 12 months. You can always put in, change the end date. You have to put in the end date when they come back to work anyway. And there are forms out there, a lot of them, that are expired. You can void those. So say someone goes on medical leave and you forget to term them, or they come back and you somehow, while they're on medical leave, put in another medical leave form on accident, CARS will accept it unless there's an open form. So if you have open forms, even if they're expired forms, and you try to change someone's marital status or address, it's going to tell you you have an open form. And it's very frustrating, I know, because I get calls from the counties that say, what do I do with these? You have to void them. And you can search just by going into the portal and click on change form and hit search, and at the bottom, it's going to pull up any form that you've ever done. And then there's a tab that says open. So you can void all the forms that are open or expired. Not open, sorry, expired. So you'll be able to find, if you're looking for a specific person, you can search by social security number or name, and that's an easy way to find them. And on the employment information change, this is completed when there's any change in employment information. So if someone goes from part-time to full-time and the employee is eligible to enroll in SURF, submit the salary and hours, and part-time for the part-time service, if it's in the same year, we will offer that service to that person to purchase. From full-time to seasonal, if the participant falls off of the payroll for more than 30 days, a change form must be submitted. Likewise, if a participant goes from full-time to part-time, there's a greater than 30-day break in service, the term form should be submitted. If you're going to have somebody that's full-time, and then I know people, for some reason, a lot of people don't want to submit term forms, but if they're truly not going to work, they're only going to work once every 6 months, and they're not in a seasonal position, we're going to ask for that term form, and if they come back on payroll, and we tell us they're part-time. So if they're really going from a full-time position to a part-time position, and they're only going to work every once in a while, like a reserve deputy, they don't get paid. And I know that a lot of counties have questions about that. If a deputy terminates employment, but they're going to work their 100 hours that they need to get their reserve status and they don't get paid for it, they still need to be terminated because they're not going to get any pay. And again, on these, void the forms that are expired. Next are the non-vested term forms. These are submitted via CARS only. Again, if you could submit them within 15 days of termination. With our new process, you don't have to wait until they're terminated because you don't need to know the contributions paid anymore. So you can submit them 2 weeks before the person terminates. We can't post it until the termination date, so you're safe in submitting it because we can't process that form until that date gets here. So if the person decides not to terminate employment, you can go out and void the form. But we like those within 15 days of termination because I can guarantee you the day that person walks out the door, they're going to call here and ask for their refund. And then we have to say, oh, well, we don't have a form from the county, but we'll call and get one. But you can submit them now before. We also would like to have the 2A. If you guys can submit that with the term non-vested form, that's great. You can hand it to the person. I know sometimes you don't know they're leaving until after they're gone, but if you know someone is leaving term non-vested, give them a Form 2A, please, and you can submit that with the term non-vested form when you submit it to CERF. If they haven't been there very long and their contributions aren't $200, we don't need a 2A. We just verify their address and send it. Melissa came in and introduced herself. She's our refund specialist. She does all the refunds now. She's gotten to where she really is getting them out the door as soon as they possibly can go. Next are the term vested forms, the Form 2V. This form can be printed from our website, which is up there. Please make sure you use the most up-to-date versions of our forms. If you don't, hopefully your benefit specialist is directing you to go to the website and print it. It does make a difference, especially on the term vested form. We added a blurb probably a year ago about them having previous service that they haven't been offered to purchase. So there are things, and the employees really need to see these to verify their salary and their years of service. I know a lot of times if they're not retiring, if they're not immediate, then I know that you all don't see them sometimes either. And if you can't get a signature on a form and somebody is 35 years old and you know they're not near retirement, we'll mail that form to them. But I always ask my participants to verify everything on the front end if they can, because if we find a discrepancy now versus 20 years from now, it's going to be a lot easier for us to get a hold of the county and not have to ask for salary that's 20 years old. Again, we would like these within 15 days of the term date if they're not vested. A person needs to be have 8 years of 1,000 hours in each year to be vested. And on that form, we ask for the 2 highest years of salary with documentation. That can be a certified payroll record, or it can be a W-2. Certified payroll record just needs the seal stamped on it. If you don't have a seal, you can put something on your letterhead in front of it that just says you verify that the attached salary is just true documentation of, just put a blurb on that. And I think you all should have gotten in your county, your clerk newsletter, the verbiage that you can put on that letter. If not, ask your benefits specialist and they can help. And I think most of y'all have seals. But if you seal it and sign it, we don't need any additional documentation. And if the person was hired prior to 2003, or they didn't have contributions paid in, we need the initial salary verification. That also needs to be submitted in CARS. If you have somebody that was hired in 2000, you can submit 2000, 2001, and 2002. If they paid contributions beginning in 2003, you don't have to do any of the years after that. We do have a lot of counties who have employees who have 0 contributions, and then we need all the salary. If they're retiring immediately, we would like a 2B completed. If you don't give that to them, we will. But it's nice to get that on the front end, and we know when we run our estimate whether or not we should include joint survivor options. That's basically what that form does. It just tells us if they want to list a co-annuitant. Both of these forms must be dated 30 to 90 days prior to the commencement date. We like them to be dated the same. If we don't get a 2B, we will ask them to go ahead and date it the same as, or within a few days of the 2V is okay. The closer to 90 days, the better it is for us. That way we can get the ball rolling sooner. It's very important to get these forms dated. I have people who miss payments. I have somebody who is 70 years old that's missing 3 payments because their 2V was dated in May and they left in February. So then they can't commence until July. And if they're 62 years old, it's like throwing money in a trash can if they don't get their pension, because it's not going to grow. If they're 55, 57, it's not as bad. But if someone's 62, it's very important to get them to date that definitely at least 30 days prior to the commencement date, not the term date, the commencement date. On page 2, the clerk needs to make sure they sign and date it. A lot of deputies sign the clerk's name and put by their name. That's where the participant needs to make sure it's signed and dated, and that's where the 30 to 90 days comes into play. So here's the information on the salary verification. Again, if you have questions, always call. If we don't get a salary verification, we'll submit one to you in CARS. If we have discrepancies, we'll submit it back to you in CARS and ask you if it's more than $100, we have to have documentation and we update our records. So if we have discrepancies, if there's a comments box, we always put a comment, submit it back to you, and send you an email and let you know. These forms do not have a computer-generated email. The rest of the forms do. If you submit other forms, if you upload your supplemental upload file, if you use that, there's a drop-down box that says benefits or accounts. So if you're doing payroll uploads, that's accounting. If you're doing term non-vested or term vested, that's benefits. And an email will be automatically generated and we get the email. So you don't have to worry about contacting us and letting us know. It is generated via CARS. And after the participant is terminated, accounts will send you a final salary verification. They initiate that. And that will be after the employee's final paycheck. And if you accidentally pick the wrong drop-down, we'll email each other's department and let them know, because we go to the file and download the information and print it. I love that feature. It's so much nicer than faxing. With the fax, the date of birth or amounts always get jumbled and you can't read them. It's really nice to have it uploaded in CARS. Really, I don't have questions yet because I wanted to talk a little bit about the death benefit. A couple years ago, we changed some things here at SURF, and now I do all of the death benefits. I think it's a lot more efficient with one person doing them, and it's easier for the counties to know that one person can be the contact for all of the death information. If they, as we've discussed, if they die while they're employed, there is a $10,000 death benefit. If the person is vested, you would have to submit a 2V just like you would if they're retiring and the date of death is used as the termination date. There's a checkbox that says, is the termination due to death? You just check it. It's the same with the non-vested. The date of death is used as the term date, and refunds will be paid to the beneficiary. If there is no beneficiary and someone is single, it has to go to an estate. It's really important to keep those forms up to date for active employees, because I have to tell people they have to set up a small estate affidavit or go out to the government's website and get a tax identification number before I can pay their contributions, and it's a lot of trouble for somebody who's dealing with a lot anyway. So the $10,000 death benefit is not as, we do still have to pay in an order, but if they're not married, if they have kids, at least that can be paid to a child, but not the refund. And again, as Jim said, we've had times where there's an ex-spouse listed, and that's who gets paid if they do not update their forms. It's the last form that we have on file. I will contact the county and I will ask you to send me your most recent 1A. Once in a while, we don't get one submitted to us for some reason, and at least we know then if yours is dated past the one we have, it's the most up-to-date form. So that is one thing I will ask for always. If married, there is a spousal benefit. If not, the contributions are refunded. If they're non-vested, the term form must be submitted via CARS also, and that comes automatically to me too. All of these forms can be found on the SURF website. There's forms for the death benefit and there's forms for the refund. So that's all in your clerk handbook too, but if you have a death, please call me and I'll walk through it with you. I know it doesn't happen very often. Sometimes it happens quite often in some of the counties, but always feel free to call any of your benefit specialists if you have questions. Do y'all have any questions?
I tell the instance if they don't have any questions today, then they don't get paid, so please, somebody ask at least one or two questions.
So will you just do a quick breakdown of if they're single invested or single and non-vested and what they get? And then can we talk about,
Sure.
the dependent children again? I'm sorry.
No, don't be sorry. That's why we have you all here. I'd rather you all leave here understanding. And it really did. I'm not kidding. I had somebody who passed away 3 days after the last one, and they actually submitted a term non-vested form and still completed the paperwork. So if you're single,
Yeah.
and you're vested,
Yeah.
no matter what, you get a $10,000 death benefit, period. If you're
Unless you're on leave?
no, if you're on leave and there's no medical leave policy, that is where the kicker is.
Oh, okay.
If there is a medical leave policy,
Sure.
you get it. If you don't have a medical leave policy, you don't get it.
Right,
But
okay.
that we still have a few counties that don't have it, and I've had to tell somebody there isn't one when they call, and that's not a good.
Yeah.
So anyone who's an active employee who is on medical leave, or I will tell you that if you have someone that is going to be out and you know they're sick, you know they're terminally ill, even if you pay them a day a month, they get paid that payroll. So as long as they receive pay in that 30 days, they're going to get the $10,000 death benefit. So if they receive holiday pay, or if you have people who donate hours and you pay them 8 hours that month, they're going to get the death. They don't have to be full-time pay. They just have to receive pay in that month if you don't have a medical leave policy. It's when they fall off that payroll that they're in an ineligible position. They're not, and that's in our statutes. That's in our rules and statutes. That's not our, and I have to go by it.
Right. Well, and we really don't put them on the leave until they fall off payroll anyway, correct? Or did I-
Yes, that's exactly right. So you don't even have to worry about medical leave as long as you pay them. You pay them a day a month, or we have people that pay them, 1 day a month if they're on leave. So anyone that's active gets a $10,000 death benefit. It's whether or not they're single that there is a difference. If they're married, their spouse gets 50%. Now, if they choose, it's lower than that if they're not 62. So if someone passes away and he's 57 and he's an active employee, I will send a document to the spouse after I receive the forms that I need from them, showing them the difference in if they go ahead and commence the month after he dies or the month after he or she would have turned 62. I try to encourage the spouse to really think about it, because if something were to happen to them before they commit, if they decide to wait until the month after the participant would have turned 62 and something happens to them, there's no benefit. It doesn't carry on to anybody else. It's actually a true spousal benefit, and it's 50% of what that person would have been eligible for at that time.
If they're vested or not?
If they're vested. That's only vested.
Got it.
Non-vested, it's
It's just a refund.
of all contributions paid. And it's dependent on what forms we have on file from that person as far as the Form 8 or the 1A as to how that refund is paid.
And then with the kids, is it, so it can be a dependent child, but it has to go to either the estate or a
A trust,
custodial account?
yes. And that's on those forms.
Until they're
18, and that's on those forms. And we have something new coming down the pike. It's being done with refunds, and it's going to start with death benefits. I'm going to be able to use direct deposit. That's going to be nice for the $10,000. I will tell you that since we've kind of evolved in this process, I pay out the $10,000 death benefit in a couple of weeks. I don't have to reconcile everything like we do if there's a refund of contributions. And I'll call the funeral home once I find out. Once I know, I usually call the funeral home and ask them to fax me a copy of the death certificate just to help the person. And that check can be mailed honestly in 2 to 3 weeks. And if If they don't want, now they have to fill out their form that shows me whether or not they want it rolled over, or whether or not they want 20%, more than 20% contributions withheld. But typically that $8,000 check, because most of them use it for the funeral expense, they can get that before 30 days is even up, as long as there's not anything controversial with the death. That is another thing that's in our statutes. We can't pay out to anybody who, if they're involved, if they murder the person, if they're involved in the killing, then obviously the death benefit's null and void. But otherwise, the death benefit is, yes, we pay it. And it's not life insurance. We get that question a lot. And we can't pay it to funeral homes, and we can't pay it to anybody else other than who's on that form. But we pay the death benefit.
Other questions for Nancy on the benefit side? One thing I did want to explain, you know, we have that kind of 15-day requirement for both terminations and enrollment forms. And really why we put that on there is we're trying to get those forms in our system and posted before you have your next payroll. If you upload your next payroll and somebody's fallen off payroll or been added on and we don't show them in our system properly, you're going to get a question about it. So we're just kind of trying to get ahead of the curve there and cut down on some of the back and forth with you on then. And I know when people get hired and when they get terminated, there's a lot of paperwork to fill out. So we're sympathetic to that, but we put that 2 weeks in there just to try to get the payroll piece to work out okay.
Thanks again for coming today. I know you all made a long trip,
And we'll be meeting with you all, benefits and accounts in the afternoon, so thank you.
We are, no, we are running a little bit ahead of schedule, but we're gonna go ahead and just take a 10-minute break now. You guys need to walk around or go outside, hopefully it's pretty out, and then we'll meet back here to start on the accounts portion. Okay, I think we maybe still have one person or two stepped out, but we're gonna go ahead and get started again with the accounts section of our presentation. Since after that is lunch, which is always very exciting. So this is Cynthia Campbell. She's our lead account specialist, and I'll kind of turn it over to her.
Okay, so before I get started, did anybody think of any benefits questions during the break? That's usually what happens to me. They give me a break, the person's on, I'm like, oh, I should have asked about this. So no questions? Not that I can answer them, I'm just being nosy. Okay. All right, so if you guys don't have any questions, we'll just into the fun world of payroll reporting, right? That's what you all were thinking, wasn't it? So before we discuss the payroll reports, I just wanted to go over some definitions. So before we got cars, we always said, you know, payroll report, payroll report, payroll report. In cars, the payroll report is known as the payroll header. And then there's the payroll detail, and that's the individual row of information within the payroll report. So one person's information appears on the payroll report. And then payroll summary, which is completely new since we have cars. It's like a container. So if you have a county that pays more than once a month, you can go to the payroll summary and see all the payrolls for that specific month. If you have any questions, just stop me anytime. If I get to talking too fast, which I tend to do, just tell me slow it down. So, payroll reporting. So there's two types of formats for the payroll report. We have what is known as the flat file. And for you kind of get, you know, you probably know, you look at it, it's like a bunch of numbers and zeros and stuff, and it's not very easy to read. That is a file that is created by a programmer. If your county decides it wants to explore that option, they would just need to have your programmer or IT person contact us, and they get all the criteria for that from our IT department. So we're going to focus on the Excel spreadsheet, because that is what's usually, you know, prepared manually in the county. In addition to that, I just wanted to remind you that if your county pays any portion of the 4% contribution, that we do require an additional document. It could be faxed, emailed, uploaded into cards. It can only be emailed if it doesn't contain the full social for the members for security reasons. But we do have to have that document that tells us the portion that you're paying on behalf of your employees. And this is required by our auditors to prove that the way we post it in our system and apply it to each individual account is the way you all are paying it or withholding it from their pay. And since it's not separate on our Excel file, we have to have a separate document to show them. All right, so payroll reporting. So when you upload a payroll report in CARD, it has to have a certain name. It has a naming convention. And that name is a 3-digit county number. So it does have to have a 0 if your county number is 2 digits. And then it has the name of the county, the work county, and then that date that you see at the end is the payroll begin date of the file that you're uploading, with the year first, the month, and then the day. When you do name the file, it is case sensitive, so the county name must be capitalized and the word county must also be capitalized. When preparing your report, just remember that only participants who are both eligible and receiving pay on the payroll that you're reporting should be listed on the report. So if you have someone that's out on any type of leave and not getting pay, you can't just have zeros but leave them on the report. They must be removed completely. All columns that have numeric values should have 2 digits after the decimal point, and there must be a value there. So even if there's 0, you don't have anything to report for them, you must have 0. Bear in mind that computers, programs, all that good stuff is very literal. It doesn't make any assumptions. So it doesn't assume if the cell is blank that it's 0. We must have a 0 in that cell. And then, and format it to decimal places. So in addition to that, you cannot hide any columns or rows. If you have an Excel file that you're preparing, even if you hide columns and rows, the system will try to read them, even if they're not visible when you look at the file. So you can't hide any columns or rows. Again, you can't have any blanks in the data area. There must be something there, even if it's a 0. The Social Security number column needs to be formatted as a text. And this is because if you have Social Security numbers that start with 0, if it's formatted any other way, you may lose the 0 and delete 0. And then it'll look like you have an invalid information. So it has to be formatted as a text. Also make sure that your payroll begin date, or your payroll dates, payroll begin date, end date, and receipt date are the true payroll dates of the file, of the payroll that you're reporting. And when you prepare your spreadsheet, there can only be one worksheet within the spreadsheet. Because again, if there's more than one tab, the system will try to read information on each tab. Okay, so this is what it should look like when it's all done. And that first record type column, that D in that column, it just means D for detail. And then it gets to the T and it knows it's at the end of the file. And knows this is your total row and there's nothing else after that. As far as the county number within your file, it does not have to be listed in 3 digits. You can just have the 2-digit county. Period year, and then the period month. And then you have the payroll begin date, end date, and creation date. The creation date is usually just the date you create the file. It's not a significant date. We don't post it anywhere in our system or anything. It's just a field that they put in our spreadsheet. And you have the hours and the salary and your receipt date. So the thing to remember about your receipt date is it is tied to the period, month, and year of your file. It is not tied to the beginning and ending payroll date. So if you have like a bi-weekly payroll, let's say, and it goes from like the 20th or the 15th of the month to the end of the month, and then they get the check like the 3rd of the following month, that receipt date should be the month they get their check. And it should and that's what the period, month, and year is tied to. So if you ever see a message when you're uploading a file, and it says the period, month, and year doesn't match the receipt date, that's what it's looking for. So it's like the same period, month, and year. But it doesn't have that check on the beginning and ending payroll date because they don't always fall in the same period, month, and year as when they get their check. That makes sense? Okay. And then you have all the contribution amount columns. The first column is just the regular self-contribution, whether it's paid by the county or is withheld from the member's pay or a combination of both, just the total amount due. The next 4 columns are for members who may be making a buyback. So if someone had left and returned and they had prior service that they could purchase, that's what those 4 remaining columns are for. So in most cases, it's going to be 0. But if you ever are unsure which column it belongs in, you can always call us and we can tell you if you have a member who decides to start purchasing service. And then we have the SSN column, and again, no dashes. Make sure it's formatted as a text so you don't lose your leave 0. And then the member name, we don't have any extra formatting requirements on the name column, so it can be first name, last name, first initial, last name, last name first. It doesn't matter. We don't check the format there, so it's not very specific. And then the hire date column. And the hire date column, what we're looking for there is their hire date without a break in service. We have people who keep leaving, coming back. We need their most recent hire date without a break in service. That's what it's for. Then you can't kind of see up here, that's the logger status column. The logger status, if they are a logger's employee, we want a Y for yes and an N for non-loggers. If you are a logger's county, different counties have to do it different ways depending on their system. How CERF recognizes them as loggers from day one, but you'll have that waiting period where they're non-loggers for you guys. When you put them on this report, you can either put them loggers from day one, it won't flag it, or you can list them as non-loggers for those 6 months or however long, whichever your system requires, and we just work with that in those cases. Everybody, it's different how they have to show on our report. So, any questions on the spreadsheet? Okay. All right. So now that we got our spreadsheet all ready to go, we're going to upload it into cards. So you would log into our county portal, and then there's an upload file hyperlink, and then you would select your file type. So either the Excel file or the text file. And then you will select your frequency. So if your county pays monthly and biweekly, the only options you're going to see in your list of frequencies is monthly and biweekly. You won't see all of the ones listed here. Monthly, biweekly, and special. Special appears for everybody. So the special payroll, I know some counties have grant pay that they pay their employees, and for whatever reason, they like to report that separate from the regular payroll. That's one of the situations where you would choose a special payroll. Some counties also like to do their election payroll after election day, just instead of reporting that on their regular payroll. So any of those unusual situations, you would select the special option. The benefit of the special payroll is when you select that option, it doesn't have as many checks. So it doesn't expect to say everybody to be on the report. And so if it only has 3 people, your other 100 employees aren't going to show up as missing. It just doesn't look for information for them. It just takes what you give us. And it does some checks, but not to the extent of your regular payroll. Yeah. If you ever decide to change how you pay your employees, if you decide to go from semi-monthly to bi-weekly or something like that, you'll have to notify CERF, and we would have to change that in our system before you can begin uploading payrolls under the new frequency. So you'll browse to your appropriate file that you want to upload, and then you click the Upload File box. Okay. So one of 2 things happens once you upload the file. If there is a formatting issue with your report, for example, if all the socials don't have 9 characters, or the period month and the period year, they don't kind of line up with the receipt date, you will get an error immediately on your screen. So the person on line number 5, the social security number is not 9 characters, it'll say invalid social line number 5 or something like that. And it'll tell you right away. Any file errors that appear on the screen right away, you have to fix that on the report and then upload the report again. It has to be, it won't take it at all if there's file error questions. If there's no issues with formatting or anything like that, then it'll accept the report, and then there will later be data errors that could appear. And that's where you see like the different roles in review and all that you have to go through. And this is related to the information reported on the report. For example, if the contribution percentage is not the expected amount based on what we calculate, it'll flag it and that row will be in review. These reports usually tend to appear about 5 minutes after you upload, after the system does all its checks. Okay. Any questions so far? Okay, so once your report is in CARS, then you have to pull up your payroll header, and that's where you can see if there's any questions on the information on the file. So you can you would select the payroll header link, and to keep your list short of what appears, you can put in the payroll begin date of the file or something like that. A lot of people got used to just clicking the search button, and then, you know, because the most recent payroll appears on top. But when you click the search button, it's only going to show 100 rows of information. So if you have more than 100 payrolls in the system, the one you're looking for may not appear. So you can always just enter like the payroll begin date. Like when I go in, I'll put the first of the year, and that way I only get payrolls for this year. And I know it's not going to exceed my 100 payrolls, and I'll get what I'm looking for. So just some specific search criteria to reduce the results when you're searching if your payroll doesn't appear. And again, the most recent always appears on top in the list. Okay? So when you open your payroll header, every row will have a status. The status will either be valid or review. The rows in review, or the rows that have a question on them, will always appear at the top. So you won't have to go looking for them or anything like that. They'll always be at the top. If it's valid, that means it passed all the little checks that we do, and you don't have to do anything. For the rows in review, you will either have to suppress the warning or fix any incorrect information. So every row that's in review will have a status as far as what it's looking for. If the status is an error for that question on that report, that will require some kind of correction. Or it will require you entering a note in the payroll detail record. So for example, if by some glitch in your system, the contribution amount is less than what it should have been, we don't want you to change it to match what we're looking for. What we want you to do is just say, hey, we withheld $10 short, you know, and we'll make up that $10 on a future payroll. It will require you to enter a comment, and then you can suppress the warning and proceed. The majority of the questions related to the payroll is salary questions, salary difference questions. You know, it'll say this salary is a lot larger than the last salary, you know, or something like that. What that is looking for, what we are looking for, the purpose of that is to see if someone has had a payout of vacation, comp, or sick leave that was paid in the current year but earned in any prior year. Because we have to track that in our system. We have to make note of that. So if that is not the case for that larger than expected salary, and you can put a note, you know, they worked a lot of overtime or something like that. You would just note that on the payroll detail record, suppress the warning, and click save. And the status of that row will change to valid. Yeah. So again, if it's in review, you have to do something, even if it's just suppress the warning after you confirm the information is correct. Once all your rows are valid, you should get the submit button. If you don't get a submit button, then you will need to go to the bottom of the screen of the payroll header, and it'll list any employees that are missing from the report. And once you submitted the documentation, whether it's a term form or a leave of absence form or something like that for that member that's listed as missing, then there's a separate suppress warnings box on that main payroll header page that you would have to check, click save, and then your submit button will appear. The thing to keep in mind is that you always have to submit. That's how we know that you're done and that we kind of need to take over and do our part on this end. Okay. And that's, you know, system-wide. If you do an enrollment form, you have to submit it. You do a term not vested form, you have to submit it. There's always some type of submit. Questions from payroll reporting? All right. Well, if you don't have questions on payroll reporting, then we'll get to the money part. Because we know that sometimes your offices are also responsible for submitting deposits. Before you can submit any deposits in cards, you have to enter the banking information that the funds need to be pulled from. And everyone who is going to remit deposits has to enter banking information, even if it's the same banking information as the other person, because you can only see the banking information that you enter, and for, security purposes. So to enter the banking information, after logging into our portal, you would click the county profile link, and then all the way at the bottom of the screen, there's an add a bank account button. And then you have to enter the bank name, the type of account. You would select from the drop-down menu, and then you would select active because you're entering banking information. The purpose of the inactive option, we don't have a delete bank account information option for an account that you no longer use, so you would go in and make it inactive, and then it won't appear in your list when it's time to make a deposit, but you can't delete it. You need to enter the bank routing number twice, because you want to make sure you do it right, and then also the bank account information twice. And then once you do that, you click the save button, and our system will check to make sure all those numbers that you entered match each other. So the two routing numbers are the same, the two bank account information is the same. If all that passes the test, then there will be a message that says changes successfully made. If that message does not appear, then there is a question regarding the information that you entered, and it'll tell you what it is. It'll say the two bank account numbers aren't the same, and you'll have to rekey those and click save again. So once we have entered our bank account information, now we can make a deposit. Now remember, you only have to enter the bank account information once unless it changes. You don't have to do that every time. So you need to log in the cards portal, and then you would click the make a deposit link. Because ACH pool will be the default in the bank, the deposit type field. We made that the default, so you won't have to select that from the drop-down menu. But then you would need to do new deposit. Okay. I'll just mention here, on that main screen, when you click the make a deposit link, you can also look at previous deposits that were made, if that's something you're interested in. You would just, instead of clicking the new deposit button, you enter some type of search criteria, maybe the date you enter the deposit or something like that, to help you locate a previous deposit. You can enter the total deposit amount. There's different options on that search screen. So if you're ever interested in looking at a previous deposit, that's also possible. So again, you click the new deposit link, and then you would select the appropriate bank account from the drop-down menu. And again, only accounts that you entered will be visible in that drop-down list. And then you'll enter the total deposit amount for the deposit that you're making. And then you click the save button. After you click the save button, in the deposit details panel, there will be an add a row button. And this is where you're going to break out that total deposit by the different categories of fees that you're remitting. So if you have county and employee contributions, you would add a couple rows and you would select those from the deposit type field. You would enter the deposit type or select from the drop-down menu the type of deposit or the category that the fund is for. You would enter the amount for that category, and then you'd enter the period for that category. So for like payroll deposits, the period would be the month and the year that they got their paycheck. If by chance you're entering fees from like the recorder's office or something, if you also do that, the period would be the period it was collected in that office, not the month and year it was turned over to you. So if it's May now, they're probably turning over April fees to you. And April would be the period you would use for those other categories. And you continue to add rows until you have enough rows for the various categories that make up that deposit. And then you would click the save button, and the system will verify that the amounts that you entered below equals the total, that first total deposit amount that you entered. As long as it does, you should get a submit button. If you never submit your deposit, it'll never be pulled from your account. So it's real important that you submit the deposit. If there's any question about your deposit, it will appear at the bottom of the screen. So if you don't have a submit button, you scroll all the way to the bottom. Like if you put in a period of 2018 to 2019, it will say that, the period you listed is more than 6 months old or something like that. And it'll have you correct that before you get your submit button. So after you make whatever correction is noted, then you would click the save button, and then your submit button should appear. Any questions? Yes, ma'am.
Right now, our banks are out for bids.
Okay.
Should we change banks? Is there a time frame we need to have that into you, or?
If you change banks, prior to making a deposit from your new bank, you would just have to enter the updated banking information. Okay? But that's it. But you can enter that right before you're ready to make your deposit, and then just go from there. But I would make sure I'd make the other account inactive, just so you don't accidentally click the wrong one or something in your drop-down list. Okay? All right. Any more questions on deposit? Looks like you have a question.
I have a question about the special thing. Our collector always gives us a drainage check that she collects in January.
Mm-hmm.
Could that go under special?
Yes, where you just report just those fees for
Yeah.
your collector, just that one, yes, yes.
Because it's just that in January,
Mhm.
and hers is so big, and then we have to explain.
Yes.
I just thought maybe that was,
Yes, yes.
okay.
And we make that option available to you on the special payroll option that you can use it whichever way is convenient for you. So if that's helpful.
The girl that was doing it.
Mhm. Yes, yes, yes. Any more questions about anything we've covered so far? No? Okay. So usually when I'm at home with my kids and I ask them a bunch of questions and and then I throw in like a weird question to make sure they're listening, Okay, so deposit exception form. So, the deposit exception form, the purpose of that form mostly is for those counties that are making contributions on behalf of their employees. If any of those employees terminate non-vested, they get those funds returned to them in the form of a credit that they can apply to future payrolls, because we don't send like checks or anything. So that is the purpose of the deposit exception form. If you would like to apply a portion of your county credit to a payroll, this is how you let us know. Because if you don't complete this form, we can't apply the credit. We can't use your funds that you have in the form of a credit without your permission. So you have to complete this form. So the deposit exception form, there's a link in the county portal that's called Deposit Exceptions. So you would click on that link and then click the new button. You want to create a new form. And then you would have to enter the required information, which is the receipt date of the payroll that you're applying the credit to, the payroll begin date and end date of that payroll. And then you enter the total amount that you should pay for the payroll if you're remitting the full amount due. And then also you would enter the amount that you're remitting. And then down below, there'll be an option to use your credit for county contributions, and you would enter the amount of the credit that you're using. And when you click the save button, it'll make sure that the amount of the credit that you list is the difference between those two numbers that you listed. The amount you're supposed to pay and the amount you're actually paying. Okay. And if it doesn't match up, it'll tell you. But again, if it does, you'll get a submit button, and then you can submit the form to us.
I have a question on that. We have a credit right now, and we just got another one. Do you guys send out letters for those credits anymore?
We send out emails.
Okay,
It goes to the clerk and the treasurer, I want to say.
okay. But we'll no longer be getting letters for it, because I know in the past, like our most recent, well, class, the beginning of the year, we had gotten a letter stating like who the credit was for and how much it was for.
Right.
So I
That,
just wanted, I didn't know if we keep that just for our record for verification.
there is actually a place in cars now that you can look that up. I wanna
Yeah, I
say-
looked in that.
Okay, good.
Yeah, I know where it is, I just didn't know, I didn't want to start using it, which I've already used it now, but I didn't want to start using it unless, like, I got an actual letter just for proper verification.
Right, once it's out there, it's available for your use.
Okay.
We haven't added the functionality where you can print that for
Okay.
your records, but we do have it here, so if you have a credit out there and you would like us to print a copy and send it to you until they add that, we can do that for you also.
Okay.
And it'll list who the member was that you got the credit for and the amount per member.
And then how often is that generated? Is it like quarterly?
Yes,
Okay.
yes, it is now quarterly, but that started this year.
Yeah.
So prior to that, it was twice a year, I think. So yes,
You put more than one person in.
on the notification that goes out, that lets you know the credit is there, I'll ask our IT. Because I know that comes, somehow they know in our system who should get it.
Because I have two payroll people,
Mhm.
and then I'm the county clerk, so I would like a notification.
Mhm. You should have gotten a
Well, I
notification.
think my deputy.
So yeah. So I will ask them how that works out, because I thought it was the clerk and the treasurer. But I will ask. Any more questions about the county credits and the deposit exception form?
Do those have to be, like within a certain time frame? Like payroll is on Friday, do you have to have those within like 3 days?
The deposit or the deposit exception form?
The deposit exception.
You can do the deposit exception form at any time.
Okay.
So if you want to wait until right before the funds are going to be sent, that's fine too.
Okay.
You can do it when you upload your report. It's
Okay.
really up to you.
Okay.
Whichever easiest for you. We don't have a timeline that we require those.
Okay.
Any more questions? All right, that's it on the deposit exception form. Now we're going to talk about the final verification report. So this is the report that we do on all term vested employees. It's our final check to make sure that what you say you pay to service and contributions and all that is what we have in our system. And then in addition to that, it's our chance to confirm their final year's salary and then note if they received any type of payout of vacation, comp, or sick leave because they terminated, and if any of that was earned prior to the year they terminated. So this report is always initiated in our office and sent to you guys when it's ready to be completed. Because we don't send it out until after all the payroll through the member's term date is in our system. Right. So completing the final verification report. So once again, once we have the payroll through their term date, you would log into CARS and you'll get an email that says, please complete the final verification report for this member. You would log into the salary verification link, and in that lookup screen, you would put in maybe their last name or something of the member and click the search button, and the document will appear. Okay. And we would ask that you complete the amount for employee contributions paid to serve, and this is the contributions that they paid since they started working for your county, without a break in service, that is. And so if they left and came back and received a refund, we don't need all contributions, just the contributions since they've had a break in service. And then the same thing for the county contributions, any county contributions that they paid or that the county has paid on behalf of the member, and then their gross salary for the current year. If they terminate early in the new year, sometimes we'll ask for the prior year's salary too. Or if their last check just happened to bring them into the new year, they got their check on January 3rd or something, we'll ask for the prior year's salary too, because that was their last full year of salary. So if it's early in the year, sometimes we will ask for the prior year's salary. And then we again ask you to note, there's a field that says attributable pay, to list any type of payout that they receive in the current year for any prior years. And we don't need that broken out by year or anything. We just need the total, whether it's vacation, comp, or sick leave, that was paid in the current year because they terminated or earned in any prior year. We just need that total dollar amount. In that field, if the amount is zero, you must enter zero. Excuse me. It won't let you proceed with that field blank. You must enter zero. Any questions on that? And this is the document that is probably one of the most important documents that we need, because this is the last document that we need from you guys before someone can get their benefits set up. And so if it's getting close to our cutoff for the month, we will kind of go, come on, I gotta get that document, because we try our best not to have a miss, you know, a payment or delay their payment if we can not do that. So this is probably one of the most important documents, but just bear in mind, if it's an immediate retiree, we will usually tell you. If it's not an immediate retiree, we won't keep bugging you, even if it's close to our cutoff. We just want to get them, if they're scheduled to get their payment, to get it started, but on the future retirees, yes, you can take your time.
What is your cutoff, Cynthia?
It varies, depending on the month, but it's like, what's our cutoff for setting up retirees for the month?
Yeah, so I would, as a general rule, I would say around the 20th, but it really is like a bank deadline, and then we have to back up like 5 days before that.
Right.
Yeah.
And if there's a holiday there or a weekend.
Yeah, it varies. Okay, so our deadline each month for setting up a retiree is a bank deadline that we work around. So it's usually in the neighborhood of the 20th of the month. But it's like so many business days from the end of the month, so it really kind of depends on how the month falls. So the actual day of the month changes, but it's in the neighborhood of the 20th of the month. Any more questions regarding that? So once you enter all that information, you just click the Save button, and then there's a Submit button. And again, that's how I know that you've done your part, and then I'll look at it, or we'll look at it on this end and just see how it compares to the information in our system. If we have any questions, we'll get back to you. Otherwise, you're done. Any questions about the final verification report?
Well, I always see too. I always tend to mess it up. I always seem to forget. So on that, especially because I'm new to payroll and everything, so I'll just say it. So I have a hard time on the W-2s. I'm sure because I'm not privy to all the payroll before, you know, and how they did it. But on their W-2s, like there's and there's like 401, and then there's 415, and then how do you know? And I always, and so I thought, it says SERP, and then there's a 125 and a 414. How do you know which one of those to add to make that their total gross?
Kelly, I'm not really sure as far as W-2s. Are you familiar?
Did you meet with your benefits specialist this afternoon?
Yeah, because I don't.
So specific to how they were.
Well, I thought on one of them, I thought, well, 1 year I looked up and it said 415, and I thought, well, maybe I read the wrong one. But anyway, I always have this, and then I'm going back and forth 2 or 3 times, and the boys are very and you say, no, we're not getting it. So,
Right.
So I'm just going to repeat for the webinar people. So the question was, what kind of calculations to do on your W-2s to come back to gross salary for the final verification purposes. And unfortunately, each county reports on their W-2 a little bit differently. So that's why I want you to kind of sit down with your benefit specialist, because she probably has a history of what needs to go to, you know, we have certain codes where they're supposed to be on the W-2s, but that doesn't mean that your county is doing it that way. So I don't want to just give you blanket advice and maybe tell you the wrong thing. So yeah, how their payroll, yeah, and how, like, we use QuickBooks here, and I actually have to manipulate how the savings plan information goes on the W-2 because QuickBooks doesn't like to report it right. So there's some creative ways people have to get around payroll and reporting on W-2s that are really county specific. So, but yeah, talk to your benefit specialist, and they can hopefully give you some steps that normally you do 1, 2, and 3 to get to your right number.
All right.
Any more questions? No? Well, that's all I had for you. I do want to let you know, if you think of questions later, just ask your account specialist when you meet with them. Never feel like you can't call us, because that is absolutely why we're here. I would prefer that you call and ask your questions than spend an hour looking for it when I probably could just point you in the right direction pretty fast. So you can't call us too much. So call us, that's why we're here, and it's always a pleasure working with you guys, and thanks for coming.
I just had a couple, I had to step out earlier, and Jim had a slide that I was going to talk a little bit about, so I wanted to go back over that with you now. Jim mentioned the pre-retirement seminars we're doing, and that he does the county visits every year, so definitely call him if you have a benefits fair or just have questions or want him to come out and visit. We're happy to do that. We also do what we refer to as county audits each fall. And they're not a full-blown audit. You know, we're not the IRS, we're not the state auditor, we're not going to come camp out for 6 or 7 months. We're just going to send our external auditors down for about a half day to visit the 5 counties that deal with SURF funds. So we do about 20 of these a year. So we try to get through each county every 5, 6, 7 years. And we either go out kind of on that rotating basis, or if there's been a lot of turnover in your county, we'll go out just to make sure you guys are on the right track, to see if you have any questions. As far as the clerk's office goes, we usually spend about an hour there, and we'll test kind of some of these things we've talked about. The 15-day reporting requirement for terminations, for enrollment. We will look at your W-2s to make sure it looks like it's generically what we would expect as far as how SURF's being reported on there. We will recalculate contributions for a couple of people to make sure it's 0, 2, 4, 6, whatever it should be. And this is really the purpose of these, is our auditors require us to do employer monitoring, and you're our employers. So we're having to do something to check to make sure you guys are doing right, and these county visits were the best way we could come up with. So you're definitely not being punished or picked on. We're just trying to meet our audit requirements.
We're just trying to keep the auditors happy.
Always trying to. And they make fun of me. I actually was an auditor for 13 years before I came here, so I get lots of auditor jokes, kind of like lawyer jokes. But on kind of the same token, if you guys have your county auditors out and they have questions or need to confirm anything with SURF, send those requests to me and I'll be happy to give them whatever information I can. One thing we've kind of been working on over the last year is improving our SURF website. So I did want to just bring that up really quick to kind of show you a couple of things. What we did last year is we broke it down to where every person who visits it kind of has a section they can go to. So of course, if you go to employer, you're going to see we have different instructions for the county portal. We'll have the recording from today's webinar on there. We have the clerk's handbook. And then of course, if you're really bored and want to read the rules and statutes, they're also on here. You know, the member portal is on here. Financial information, a lot of this is what your auditor may ask for. And then of course, if you're a member or a retiree, there's a ton of information. We do have tabs for some of these enrollment forms, beneficiary forms, death forms, you know, that we kind of talked about throughout the day. We are trying to make most of the forms on here editable. So we know kind of that what people like to do. Nobody likes to print a form and fill it out. So we're kind of in the process of doing that, where somebody can just click on the two-way, they can pull it up, they can type it in, print it off, and send it to Melissa to do a refund for them. If you guys ever have any suggestions on how to make the website more user-friendly, please let us know, and we'll be happy to take a look at that. Any questions on any of that information? Okay, well, we're going to take a break. I think lunch is ready, just across here in the hall in our break room. If you guys want to make your plate and come back here, and about 12 o'clock, we'll have Richard come in and start talking about the savings plan. Okay, there were a couple of things I wanted to go over right quick, and then we'll let you all continue eating lunch, and then let Richard present his portion. So one thing I forgot to mention is, you know, loggers pays their benefits a little bit different than SURF does, and I apologize if Cynthia touched on this and I just missed it when I was out of the room, but they actually make their first benefit payment based on estimated salary. And our rules don't require us to not do that. So we have to get final salaries, final verification report, everything done before we can make that first payment. Where loggers will make it, you retire December 31st, they'll get you a payment January 1, and they'll true that payment up a couple months down the road when they finish their reconciliation process. So if you ever have a retiree come in and say, well, I got my loggers payment, but I haven't seen surf yet, just because we have to usually wait that month or two to get everything done so we know their exact payment. Once they get a payment, per our statute, they can't change. So if we just happen to miss a last payroll or something going on, I mean, it really could be to the detriment of the retiree. Is everybody getting our monthly clerk bulletin? Everybody signed up for that via email? Okay, we try to put different tips in there to help you guys out, or if the county comes across an unusual situation, we put information in there so it gets out to you. Anytime you guys want individual training, you know, you're welcome to come here and we'll sit down with our benefits or accounts people, or we'll even send them out to your county. So if you have really a lot of turnover in your office or are just really struggling and want some one-on-one time, don't hesitate to ask. With that, I'll go ahead and turn it over to Richard to talk a little bit about the savings plan.
Well, thank you, Kelly. I must say you guys are making me hungry, but I'll try to get through it. And we'll talk today about the SURF Savings Plan, which also is called the 457 and the 401A. So what is that exactly? That is what we call a defined contribution plan, where that means it's a balance-driven plan, whereas the pension plan is referred to as a defined benefit plan, and it's more formula-driven. So this is just the other side of the coin. Some people refer to it as the government version of a 401k. That seems to click with a lot of people because most people haven't really heard of a 457 if they're not in government work, but that's basically what it is. It's the government version of a 401k. So this allows pre-tax contributions to be set aside for retirement. It's just a different retirement vehicle, and it does have to be funded through county payroll. So who all is involved in that side of the business? I know you've seen a lot of people today. I'm pretty behind the scenes these days, but I've been around a long time. So I act as the plan administrator from the SURF office, which means I sign a whole lot of distribution forms, death claims, incoming rollovers, hardships, RMDs. I get to talk to a lot of you guys on the phone, but I don't get to see you in person very much. So good to see you here. And Jim Ellison, who you all know, acts as my backup if I'm out of the office. And so we keep him hopping in a variety of ways. But as you know, probably know, he came over from Empower and is very experienced with the savings plan. And other characters, Empower Home Office is out in Denver. Now there's hundreds and hundreds of people out there, but they're the ones that cut the checks, and they are the record keeper for the savings plan. Someone that you probably have seen is Robert Eastburn. He's the Empower representative that goes around to all the different counties. He's quite the road warrior, and he'll encourage people to sign up, just give them education, talk about their accounts and their investments. Probably talk to them about possibly rolling money into the plan. And then Connie Reddick and Mary Faro, I know there's a lot of Marys running around, but Mary and Connie work out of the St. Louis office, and they're also helpful with the online processing, what we call the Plan Service Center. So what a lot of people wanted to know is, when can I get my money in regards to the savings plan, the 457, 418. So these are what we call qualifying events. A person has to have a qualifying event to pull money out of the savings plan. The most common being separation from service. They can also, of course, wait until retirement. That's the whole goal there. A person can actually do an in-service withdrawal at age 59 and a half, and that's on the 401A side only. There's a special form for that, but not everybody realizes that. But they can pull money out while they're still employed once they reach 59 and a half. On the 457 side, they can't do that while they're employed until they turn age 70 and a half. And then while they're still employed, there is also an option for a hardship withdrawal. And that most common thing we see there is medical bills not covered by insurance. It can also be utilized if someone's behind on their mortgage or rent. They're looking at eviction or foreclosure, floods, fires, tornadoes, those types of things. So there are special applications for the hardships as well. So what are your options with this money that is separate from the pension plan? A full cash out is always an option, no matter what your balance is. To do a rollover, like into an IRA or a new employer plan, once a person has left the county, you have to have at least $200 in an account to do a rollover. A person can leave the money invested with Empower after they leave. If they have $1,000 or more in their account, they're welcome to leave it there. Once a person gets over $5,000, they get a couple more options, such as partial withdrawals. If they just need $1,000 or whatever their number is, they can do a partial withdrawal, or they can get set up for periodic payments. So let's say they retire and they want to pull out $300 a month from the 457 plan and $200 a month from the 401A. Make up whatever number you want, but that is an option. They can set it up monthly or once a quarter, once a year. And then that just keeps happening until the account is zeroed out. So it's not a lifetime benefit, it's just a balance-driven benefit. And then also be aware that if an employee has left the county and they once they reach 70 and a half, if they've left money invested with Empower, they will have to start making at least a minimum withdrawal every year per IRS rules. We call those RMDs, but that is something to definitely be aware of. There's special forms for that if they only want to do the bare minimum. And it's not very much starting out. It's usually about 4% a year of their balance when they first start off. It gets a little higher later on. So 457 and 401A, what's the difference between those two? The 457 is the voluntary contributions that the employee puts in and any earnings on those contributions. The 401A holds the match money that the employee earns by participating in the 457. So that's two separate accounts. And then the 401A has a 5-year vesting schedule on the match money only. 457 is immediately vested. That's the employee's money. And then for non-loggers, employees only, we get that pesky little 0.7% mandatory deduction that goes into the 401A side. And that money is also immediately vested. That's their employees' money. So the 401A holds two different money types. Holds any match money that comes in, and it also holds the 0.7% that comes in. Incidentally, it also captures many rollovers. If an employee is rolling over money from a 401K, it would go into the 401A. If they're rolling from an IRA, it would go into the 401A. The only types of transfers or rollovers that go into the 457 is another 457 plan. So what I'm going to be going through next are the distribution forms. I see these things come in every day, and I brought along some examples if you want to follow along. You may have to share it. Everybody covered? So I know you guys get hit with a lot of different questions, But as far as the distribution form goes, some of the more common questions I get are like the account extension. What is that? That's just leave it blank. That applies to death transfers, so don't even worry about that. These are Empower forms, obviously. But division location, that just means the county, your county that the person worked for. And then also, there's a spot that says country of residence. Everybody reads this as county of residence, but that's only if it's a non-resident alien. But it's not the county that goes there. And then in section B, there's a spot for separation from employment. That's just the employee's last date of service with the county. Effective date only comes into play if the employee's wanting to postpone the withdrawal for some reason. Maybe they're going out of town, or for tax reasons, they don't want it just yet, but they want to get the paperwork done. Typically, that's not filled in, but if that's the reason for it, every once in a while I get somebody that wants to postpone it, but they want to get their paperwork in. And then there's, for a section of the rollover, this is where you mark where the money is going to, not where it's coming from. So typically, if somebody's got an IRA with Edward Jones, and I'm just throwing that out there for hypothetical, they would mark, if it's a traditional IRA, mark that box, write in 100% if they're wanting to roll over the whole thing on the amounts line there. And then there's a different spot where they fill in the Edward Jones information, or whoever the money is being rolled over to. And then there's also a spot for periodic payments that we talked about earlier. They do have to pick their payment start date. They do have to pick the frequency. And then they would also pick the amount if they're going amount certain, like $500 a month. Or they can also go period certain. They say, I want to spread this out over 10 years. And they can go that route. Also on the form are distribution delivery options. The most common, the easiest, the cheapest is checked by U.S. Postal Service. That's where Empower will mail the checks from Denver to the employee's home. There is also a direct deposit option. Now keep in mind, to do that, if it's just a one-time direct deposit or a full withdrawal, they're going to get a $15 fee. They have to have a copy of their voided check, and they have to get the form notarized. So if they're willing to go through all that, they can get direct deposit. As far as taxes on the savings plan distributions, federal income tax will be withheld automatically at the rate of 20%. That is right off the top. That's for everybody. So typically, you don't have to fill out anything on the federal side at all unless they want more than 20%, which sounds like a whole lot, but every once in a while I get somebody that wants an extra amount withheld. So whatever amount you put on the federal side is going to be in addition to the 20. So if they want 25, then you just put 5 in on the federal side. If they want 30, just put 10% in. On the state income tax, they do not withhold state income tax as a matter of course. They won't do it automatically. So unless the employee tells them to on the form, no state income tax will be withheld. So the spot where it is withheld, it would say it's the last option on the state income tax side, which is actually it's on the next page if you're following along. It's on page 6 at the top on the right-hand side. It says, I would like state income tax withheld - optional. And so they mark that box and then they fill in whatever percentage they want. And the most common numbers for state income tax is going to be either 5 or 6%. They can pick whatever number they want, but those are kind of the two biggies. So then on page 7 is the signature page. The employee must sign it and date it. And then we talked about, the notary is required if they're doing direct deposit. It's also required if they've moved, recently and they've got a different address of record. But otherwise, they won't need a notary. And then I sign it at the bottom as authorized plan administrator. And then I will fax it at the appropriate time to Empower Home Office. And what I mean by appropriate time is we have to wait 30 days after the employee's last date of service. That's to capture all the contributions, make sure all the contributions get posted. And it's also to make sure they've had a true break in service. So if an employee leaves the county, but then they turn around and come back, if within 15 days or 20 days or 25 days, it's not considered a break in service. Their vesting will continue just like they never left. And it also applies if they switch counties, unless, they would go to a county that's not in serve. But any other county, they will continue just like they never left. So I know you guys deal with a lot of paperwork. I get questions a lot, or people not being sure where to send different forms. But as far as these distribution forms, you're welcome to send them here to the SURF office because I have to sign them anyway. I know on the form it says it gives the Empower information, which isn't wrong, but they're going to send it to me anyway. So distribution forms, if you want to send them here to me at the SURF office, I deal with the hardships, the RMDs, incoming or outgoing rollovers, and death claim forms. And you're welcome to use the fax, of course. Empower Retirement in St. Louis, they get the enrollment forms and the beneficiary forms that relate to the savings plan. I don't do anything with those. So those go to St. Louis, and there's their fax number listed. So I jumped ahead a little bit as far as the timeline receiving the money. We talked about being off the payroll for 30 days. And then I fax it to Empower Home Office in Denver. And then if they're mailing checks, it should be 7 to 10 business days coming from Denver. It's hard to guess on the mail. It gets harder all the time. So any questions at all about the savings plan? All right. Hope lunch was good. Well, thank you guys again for coming.
Well, thanks everyone who joined us on the webinar. Hope you enjoy the rest of your afternoon.